Welcome to the Houston Southeast YouTube channel. The district is excited to partner with Filet Inc., a Houston Southeast business, in supporting your efforts as you seek federal, state, and local funding for your business. Visit houstonse.org to learn more about the Business Retention Stabilization Initiative. This is your district at work.
The most important thing is to know what your personal financials look like. So what we're going to go over is a personal financial statement. Okay, it's really easy. It really is only talking about you. The calculations are usually in a simple state like Excel. You can find many interpretations of a personal financial statement. This one is one that I like because it's really inclusive of a bunch of things that I think are important. But sometimes when you go to different banks, they give you their interpretation of this particular form. Don't get scared, because if you fill this form out and you keep a copy of this with you, maybe every quarter you go out and actually update your form. By the time you need the information to fill another PFS, which is what we call them for short, you will have this information to pre-fill that document. So let's get started. Personal financial statement. First thing we do is we identify the time in which the bank or the lending institution is requesting us to acknowledge our position. For instance, we've just passed October 31st, 2020. So I'm going to use that as our closeout date. Now, keep in mind, we just got to November. A lot of times we have not finalized paperwork before the next period. So you kind of sometimes want to give yourself about a month, okay? But for the sake of us just keeping it current, I'm going to use October 31st. That date is important. Okay, the next thing is all your personal information. So your name, your social, your date of birth, whether you're married or not, how many dependents you have, your address, who's all on this statement. Is it an independent statement? Your phone number, how long you've been at your physical address. You also have a space here for your employer. Some people are employed with people, some people are self-employed, some people are both. In our case, we're going to say, for the sake of this conversation and me talking to small business owners, that we're not employed by anyone. We actually work for ourselves. But it wouldn't be bad to put in there the company that you own as the business that you work for. So in our case, we're going to put the company we work for. And y'all know I don't mind using my phone number at the office. Notice on position, I actually put owner initially. So believe it or not, when we're trying to talk about the position we hold with a company, sometimes it's driven by the type of company we have. So an LLC is usually, you usually have members, where a sole proprietorship would have an owner and a corporation would have a shareholder. So in this case, we're an LLC, so we're gonna say we're a member. Can also be a director. So we come down, and as you can see, there are information on assets, there are information on liabilities. The goal is for us to list all of our assets, all of our liabilities, and determine what our net worth is, okay? First, we have cash in the bank. So the cash in the bank for us, for the sake of this situation here, is $13,455. Marketable securities, non-securities, basically those are investments. So say you have stocks and bonds or futures, all these types of trading vehicles. Though that's the information that will go in these boxes. By the way, when you see cash, cash doesn't necessarily just mean cash on hand. It means cash, period. And sometimes your PFS would actually say cash in the bank, cash on hand. For the sake of being simple, and the reason I love this particular sheet is because it's just cash. It makes it a lot easier. Okay, so it says investment in LLC. So if we own an LLC, then obviously we have an investment in the LLC. And because this personal financial statement is about you personally and not about the business, it is important that you get to know the value of your company. The goal is to try to determine how much your company is worth. I always say you can't just make numbers up in your head. And if it's my company, of course, I'm gonna always say it's worth more than it may be. That's actually what I should think. But in all actuality, your company does have a value. And there are people who will go out and determine how much the value of your company is. I always say to get this number to the most reasonable place, find out what it would cost for you to sell your company. For you to walk away and go and do something totally different, what would it cost for that person to purchase, or the business or whatever, to purchase your company? A lot of times we look at our gross receipts and we try to determine from our gross receipts, which is our revenue, which is also our sales. We look at that number, and the rule of thumb is usually 2 to 3 times that number is what you would usually walk away with in the sale of a company. In our case, we're gonna say our company is worth $280,000, okay? Then we have real estate. So homestead means our property, and other means maybe rental property that we have, maybe inherited property, anything like that. So we're gonna say our personal property, our home, is worth $345,600. We're gonna say our real estate, other, we don't have any, just for the sake of this exercise. Our IRA, we saved about $67,500. As you can see, there are other items here. You have personal property, you have automobiles, you have accounts receivable. That's if someone owes you money. Personal property is like art, jewelry, furniture, things that are really expensive that you may have insured, that you can liquidate. You'll make a certain amount of money. Interest and trust, and then you have insurance. We're gonna keep this clean. We're gonna say we have automobile expense of automobile asset, an asset. So basically, if we were to liquidate our automobile, it would be $32,300. And we can give ourselves some personal property. Why not? $15,000. No one owes us. We don't have a trust set up. Now, we do have an insurance policy. And I know a lot of times we look at the insurance policy, and sometimes we even look at these term insurance policies, and we see the amount that we have paid for the insurance. Well, if we were to liquidate or something happens to us, something to the point where we need to use those funds, we would only be able to get the face value of that policy. That means over the years you had a whole life policy, and the face value is now whatever your number is. In our case, we're gonna say it's $7,000. Okay, done with our assets. Our total assets are $760,855. Now, come over to our liabilities. Usually if we have assets, we have an offset. There's a possibility that you could not, but most people are still paying on a home mortgage. There's very few people who've actually paid this off at a certain age, and I gave this guy a really young age up there. If you saw that, he was born in the 80s. So we're gonna say he still has a real estate loan out of $160,100. We're gonna say he has a car loan out for $27,800. We're gonna say his credit card debt is $2,500. By the way, there are other things. Here's the margin debt for brokers, some investment items, partnership related debt that could actually be closely related to your investment in your LLC, and then your taxes payable, monies that you owe for back taxes that you have not paid, or maybe real estate taxes that are about to come up. That's what those numbers are. We're gonna assume we're escrowed. So that number is inside our monthly payment. So if I add up all my liabilities, I end up at $190,400. So as you can see the calculation here, we're taking the total liabilities plus net worth is $760,000. We took the liabilities, we took our assets, and they net to $570,455. So this means our net worth, if we were to liquidate or something was to happen and we had to liquidate, we are worth $570,455. Sorry. All right, now the next thing we do is we come down and we have kind of the money we receive in and the money we pay out monthly. Annually, sorry. So a person who's self-employed likely does not have gross wages. They likely do not have commissions and bonuses. They may possibly have draws, but we know for sure if they're trying to keep their sanity and their bills paid, they definitely have distributions of some sort. So if we take those annual distributions, we get our total cash income. Then we go over to the expense side and we have our real estate payments. Well, we have a property, we have liabilities, so we know we have a rental payment. So our payment for the year, $21,192. You can have other installment loans. You can have income taxes that you actually have to pay. You can have contributions that you made to your LLC or partnership. You can have real estate taxes that you are currently owing for the year that we're in, unlike the payables up here where they're in the past. Living expenses. So basically what we do with living expenses is we take all of the money that it takes for us to function in a month. So for instance, our water bill, light bill, gas bill, insurance, our food, our maintenance on the property, maintenance on the car, all of our monthly bills are inside of this living expense. Then we go to rental expenses. Well, if over here in the the cash income side, we had rental income, then likely we would have rental expenses over here. In this case, we do not. And then we have other anticipated payments. That's if you know for sure something is coming up this year. Okay, when we take our total income and we subtract all of our expenses, we get our net cash flow. In this case, $408. At the bottom here, these are just like some things that, like if you were to want to just keep account of just general things that happen in life, this information is relevant. Some lenders actually ask these particular questions on their P&Ls. They're considered contingent liabilities. That means there are liabilities that may take place, like a lawsuit of some sort, or a divorce pending that you may have to pay alimony or child support to. Those are the types of things that end up in this area. This personal financial statement is technically everything that you need or that a bank needs or any lending institution to determine what your capability is on this particular loan. Now, I will tell you, in the case of this particular financial statement, our net worth is not bad. We're worth a little over $500,000. But the problem we have here is our net cash flow after we receive all of our income and we make all of our payments to our expenses, we can only afford $408 for the entire year. That's what a lender is trying to determine when they ask you to fill out a personal financial statement. So it's very important that you understand what this document is doing. If you're a single member LLC, this $36,000 is that number, that net number that falls on your Schedule C, on your tax return, on your 1040 Form Schedule C. This number is our net. This is the number that we would have been taxed on, okay? Understand, a lot of times we don't want to pay taxes. Who really wants to pay taxes? It's not something that everybody just aspire to do, but you got to pay the piper. This has to happen. We can't have a free country without paying taxes, so we just got to get used to it. In this case, because this income is so low, and it's likely, I'm gonna say because I made up the person, it's because, you know, we're trying to decrease our tax liability. We might have taken depreciation on the tax return. There's no telling. But at the end of the day, we're actually saying that this is basically what we took. With this in mind, as a lender, I likely would not be lending to you because you cannot afford a loan. Your net cash flow is $408. The reason I brought the tax return up is because across the board, everything matters when you're looking at lending. Though the nature of this conversation today is to fill out this personal financial statement, it's important to know why and when these documents are important. This statement can be kept up with on a annual, monthly, quarterly, however often you want to do it. I suggest at least updating it every quarter. And there are also other tabs that actually break down the items that are listed on the front page, and they let you actually pull them out and actually discuss them in general. So for instance, if you were looking at the bank information, you actually can put your information in here across the board with the details. You may have multiple banks that went into that 13455. It would be good for the bank to know, if they're trying to lend to you, what institutions you're affiliated with. Your assets, how much and what's the value? What is the market value? How much did it cost you? Are they pledged against any other loan or anything that you may have? So a lot of this stuff is really helpful and can definitely assist you when trying to get a loan. At the bottom here, if you had properties, you actually can list all of your properties here with the lender information, how much your balances are, your market value. This is a great document to have in place to just keep track of you. This is not so much to keep track of the company, it's to keep track of you, the guarantor, who would be having to be on the loan for the company. If y'all have any questions, be sure to reach out to us on the YouTube channel.
Don't forget to like, subscribe, and share this channel.